Every day, trillions of dollars move across the world, outside the control of governments, outside the oversight of central banks. You don't see it. You don't touch it. Yet it affects your mortgage, your retirement, the very markets that decide the value of your life savings. The banks you know aren't the ones in charge. The real power lies in a shadowy system, invisible, interconnected, unstoppable. And when it falters, entire economies collapse. Who really decides where the money flows and who fails first when the shadows break? By the end of this video, you'll understand the hidden engine that quietly controls the global economy. To understand shadow banking, we must first understand the banks we see. For centuries, commercial banks were tightly controlled, regulated by governments, bound by strict rules, limited in how much credit they could create. Every loan, every note, every investment was closely monitored. Risk was visible. Mistakes were expensive. Discipline was built into the system. But human ambition always finds a way. In the 17th and 18th centuries, wealthy investors began experimenting with ways to lend and borrow outside the watchful eye of regulators. Trusts, merchant houses, and early repo agreements created hidden channels of credit. By the 19th century, these non-bank institutions, what we might now call shadow banks, were quietly moving money, funding ventures, and lending in ways traditional banks could not. They offered higher returns, faster lending, and opportunities invisible to the average citizen. Yet with opportunity came fragility. There were no central bank guarantees, no safety nets. If one part failed, the ripple could spread, but at the time, the system was small, contained, almost unnoticed. The 20th century brought growth. Money market funds, hedge funds, off-balance sheet vehicles, and securitized loans became the backbone of a parallel financial ecosystem. Regulators were focused on visible banks, while trillions quietly flowed through the shadows. Leverage grew. Complexity grew. And with it, the hidden engine of modern finance was born. By the dawn of the 2000s, the shadow banking system wasn't just an experiment anymore, it had outgrown the traditional banks themselves. Vast, interconnected, and largely unregulated, it had become the invisible skeleton supporting the global economy, a skeleton that no one outside finance truly understood. By the 1980s, the shadow banking system had grown far beyond its humble beginnings. What started as small experiments in lending outside regulation had transformed into a sprawling network of financial power, invisible, intricate, and unstoppable. It worked like this. Mortgages, corporate loans, and other forms of debt were bundled together, sliced, repackaged, and sold as investment products. These structured vehicles, called collateralized debt obligations, or CDOs, spread risk across the globe. Hedge funds, investment banks, and insurance companies became the architects and operators of this hidden economy. Money moved in chains, a loan here, a repo agreement there, collateral shifting hands dozens of times before anyone even noticed. Off-balance sheet vehicles allowed banks to expand their reach without showing it on official reports. Regulators saw some numbers, but not the web connecting trillions in unseen credit. The system thrived for decades because, in theory, it was self-regulating. Each player trusted the next. Risk was spread across the chain. Credit flowed efficiently. Growth seemed infinite. But beneath the surface, fragility was building. Leverage reached levels traditional banks had never imagined. A single break in the chain could trigger chaos. By the early 2000s, shadow banking had become larger than traditional banking itself. Trillions of dollars were moving every day, unnoticed by governments, largely invisible to central banks, and completely detached from the rules that governed ordinary finance. It was a system designed to create wealth and vulnerability on an unprecedented scale. The crucial insight: shadow banking worked perfectly until it didn't. Invisible, interlinked, and highly leveraged, it had become a ticking time bomb. The question looming over global finance was no longer if it would fail, but when. And when it did, the collapse wouldn't just touch the markets, it would ripple through every home, every retirement account, every life tied to the global economy. And then, in 2008, it all came crashing down, not with a whisper, but with a deafening roar. The year was 2008. For decades, shadow banking had quietly expanded, building a fragile web of interlinked debt. Then, the system hit its breaking point. It began in the U.S. housing market, where subprime mortgages loans given to those least able to repay had been bundled and sold around the world as supposedly safe investments. At first, the cracks were invisible. Prices kept rising, credit kept flowing, and the invisible engine of wealth continued humming. But beneath the surface, risk had accumulated like a storm gathering over the ocean. When home prices began to fall, the first domino tipped. Borrowers defaulted. Mortgages failed. And suddenly, the collateral underpinning trillions of dollars in structured products was worthless. Lehman Brothers, one of the titans of global finance, collapsed in September 2008. Credit markets froze. Repos, the very lifeblood of short-term lending and shadow banking, ground to a halt. Banks stopped trusting each other. Overnight, the system that had moved trillions now moved nothing. Economies teetered on the brink. The consequences were devastating. Millions lost jobs, homes, and savings. Pensions evaporated. Global markets plummeted. Ordinary people were the victims, while the architects of the shadow system often escaped direct blame. Governments scrambled to bail out failing institutions. Central banks flooded markets with liquidity, trying to restart the invisible engine that had suddenly seized. The critical revelation: shadow banking didn't just amplify risk, it created it. Its complexity and opacity meant no one fully understood what could fail next. Entire economies were at the mercy of a system most people had never even heard of. And yet, even after the collapse, the story didn't end. The system didn't disappear. It adapted, evolved, and quietly rebuilt itself larger, smarter, and even more interconnected. The question that remained: if it could fail once so catastrophically, what would prevent it from failing again? In the aftermath of 2008, the world expected the shadow banking system to shrink, to be tamed, to be controlled. But it didn't disappear. Instead, it evolved, becoming more complex, more global, and more difficult to track. Today, shadow banking surpasses traditional banks in sheer scale. Trillions of dollars flow daily through money market funds, hedge funds, special purpose vehicles, and offshore structures. Derivatives, swaps, and securitized products now dominate, creating an intricate web that regulators can monitor only in fragments. Central banks intervene, regulators watch, but the system remains largely invisible. Its influence is quiet yet profound. It determines credit availability, shapes interest rates, and even guides which economies boom or stumble. Ordinary citizens rarely see it, yet their lives are tied to its every move. The fragility remains. Leverage is still high. Chains of trust and credit still underpin the invisible network. One shock, a sudden market correction, a geopolitical crisis, or a liquidity squeeze could ripple across continents in seconds. The engine that drives the global economy is powerful, but perilously exposed. Understanding shadow banking is no longer optional. It explains why money moves the way it does, why markets surge or crash, and why governments, despite all their power, cannot fully control the system. The real steering wheel of global finance operates in the shadows, unseen, unregulated, yet utterly decisive. Shadow banking isn't a conspiracy. It's not a secret society. It is a structural feature of modern finance, a hidden engine that steers trillions of dollars every day, decides which economies rise, which falter, and who ultimately bears the cost. Most people never see it. Most governments can barely control it. Yet its power shapes the world we live in. The truth is simple and unsettling. The invisible system moves first, and the rest of us follow. Markets crash, jobs are lost, fortunes vanish, all while the shadows continue to operate, quietly, relentlessly, and invisibly. So here's the question you must ask yourself: when the invisible engine falters again, who will pay the price, and will you be ready? If this revealed something deeper, subscribe. The patterns of history never lie, and I'll guide you through them.